Hey everyone, it's your girl Tsunami. So as you all know, we have our open house today. We have had several guests come through already, but I wanted to take advantage of the downtime to talk to you guys a little bit about the pre-approval process. So I know last video I was encouraging you all to, think about your renting situation and, trying to take that leap of faith and learning more about the home buying process and getting a mortgage, right? So I wanted to just elaborate a little bit more on that pre-approval process. So the pre-approval process is the very first step that you want to take when you're thinking about becoming a homeowner. The reason why you want to do this is because it's going to let you know how much buying power you have. The last thing you want to do is start shopping, looking at properties, falling in love with them, and then realizing that you can't afford them. So that pre-approval process is going to help you identify where you are financially, what you are capable of, how much buying power you have, so that then you can begin your home search and start to tour properties, just like this open house today. Okay, so the pre-approval process. So when you are reaching out to a lender, a mortgage broker, to shop for your pre-approval, trying to get qualified, it's important that you do a self-evaluation. And the reason why is because you don't want to reach out, run your credit, and to then find out that you don't qualify. So today I want to talk about that self-evaluation a little bit. So that self-evaluation, you want to consider, number one, where is your credit currently? Credit plays a vital role in you getting approved for a mortgage. So you want to do a self-evaluation of where is your credit today. Now there are many apps that, offer these services for free, and they can give you a ballpark range of where you are. So I definitely encourage you to look into those other apps and, just make a quick reference to see where you are before you begin. Now, when it comes to getting approved for a mortgage, here at Model Mortgage, which is a part of my RE/MAX at Home team, it's our in-house financing, we can work with clients that are at a 580. Now, of course, typically you'd want to be above that. The average or ideal number you would say would be about a 720. But we can definitely still work things out at a 580. So I don't want for you to feel discouraged. If you feel like you're not in the 600s, you're not in the 700s, we can definitely still reach out to you and try and get you qualified. Now, there are some other factors that come into place aside from that credit history, right? So apart from the credit, the second thing you want to think about is your actual cash on hand. So as part of the home buying process, when you do qualify for a mortgage, you will be required to put down a down payment. The down payment does vary depending on the type of loan that you have. So you can have an FHA for my first time home buyers that would have a federally insured loan. The FHA is the federally insured loan that will require you to have a mortgage insurance premium. So it does tag on a little bit more onto your monthly payment because of that. However, it will require you to put down the least amount in a down payment. So as of today, I do believe that down payment percentage is a 3.5%. When it comes to the other options, we have conventional, which is normally used when you're getting a second property or may have a little bit better credit. However, it will require you to put down a 20%. Now, the 20% down payment is average. I have seen some instances where it was lower, but that's pretty much what you want to prepare for. And again, like I said, it does vary case by case, but that is typical. If you already have a property and you know whether it was inherited, whatever, it's yours, but you want to make another purchase, then that will be considered an investment property. Whether you're fixing and flipping or it's actually going to be a vacation home, it will be considered to lenders as an investment property, and therefore you will be subject to at least a 25% down payment. Now, when it comes to the down payment, I get a lot of questions because clients sometimes confuse it with closing costs. Closing costs and down payment are two very different costs. So when you are approved for a mortgage, you will be required to place a down payment. That down payment percentage or amount is deducted from the pre-approval amount that they give you. So for example, if they gave you a pre-approval for $100,000 and that down payment amount was 3.5%, you will be required as part of the terms of that agreement to pay a down payment of $3,500. Apart from that down payment amount, you will then have your additional closing costs. Closing costs can be anywhere to an additional 6 to 8%. The average household is bringing in about $80,000 a year. If it is a two-person adult household, you're looking at an average salary of about $45,000. Let's say that family wants to shoot for a mortgage that is $200,000. When you're thinking about the finances that you want to have in place for a mortgage of that amount or a pre-approval of that amount, let's just stick to the FHA, right? My first time home buyers, still working on their credit. The FHA route would most likely be the ideal route you want to go, requiring you to put down the least amount of money, which is that 3.5%. That 3.5% on a $200,000 property is $7,000 cash that you're going to have available to have that lender or mortgage company commit the loan to the purchase that you want to make. Aside from that $7,000, you then have your additional closing costs. Your additional closing costs are going to consist of the taxes, your city, state taxes, real estate transfer taxes, inspection costs. Some of these things are prepaid. However, before you move forward with the offer of a purchase on a property, your realtor or agent will supply you with a closing cost estimate so that you know ideally what it is that you're looking at. So like I said, typically on a home that is about $200,000, with that $7,000 FHA down payment that you make for that commitment, you will need just about an additional $7,000 to $8,000. So let's just say $20,000 to be safe. You're looking at an upfront cost to get the property, right? Now this is just cash on hand that we're talking about that you're gonna use in the purchase of the property. When you are trying to get approved, there is a process in which your mortgage has to get committed, right? So you receive your pre-approval, you find the property, but then there is an underwriter in that mortgage company that is going to really dig into your financial situation and identify, whether or not you can truly afford the home that you're making an offer on. So in this process, they're going to look at the additional finances that you have. So this is why I also stated that you want to make sure that you have additional funding in whether it's a savings or a checking account. And typically you want for this amount to be 3 to 6 times the amount of your monthly mortgage payment. So if you're looking for a payment that is about $1,000, you want to have, apart from your down payment, apart from your closing costs, which we just want to inflate that to $20,000, right? If you're on a $200,000 property, let's just say you need to have $20,000. You want to have an additional $3,000 to $6,000 that is just going to be sitting in the bank as a cushion so that the underwriter can feel confident in approving your mortgage. So overall, you're looking at about $30,000. So I hope this information was useful to you for your self-evaluation. Of course, all of the information that I gave you varies case by case, person by person. No circumstance is identical, right? So it was just an idea for you to be able to know where you are, map it out for yourself before actually reaching out and, possibly being disappointed. So I hope this video was helpful to you guys. I hope that you share it, like it, and please feel free to reach out if you have any questions. Thank you so much for taking the time to listen. Peace.